There's a crisis unfolding in the American housing market, and it's hitting millions of families right now in 2025. Home ownership, the dream that once defined stability and success in the United States, has become almost unreachable for the average person. And the story is bigger than just high prices. It's a perfect storm made of three forces: rising home prices, high mortgage rates, and exploding costs like insurance and property taxes. Together, they create what many experts now call the housing affordability triangle. And unless something changes soon, the American housing market could be heading toward its most dramatic shift in decades. Before we get into it, if you're new here, welcome. We bring you the most important and interesting stories from the world of real estate in under 15 minutes. Let's start with the price of the typical home. The median home in America now costs around $447,000. That means to qualify for a standard 30-year fixed mortgage, you would need an income of over $112,000 a year. Think about that for a second. The average American household earns about $75,000. That gap means millions of families are locked out of the market before they even start shopping. Now let's add mortgage rates. The dream of 3% loans that people grabbed back in 2020 and 2021 is long gone. In 2025, rates hover around 6.6%. That might sound like a small number, but it changes everything. At that rate, monthly payments on a median-priced home jump by hundreds, even thousands of dollars compared to just a few years ago. The National Association of Realtors recently found that if rates dropped just to 6% flat, hundreds of thousands of buyers would re-enter the market immediately. But at 6.5%, they stay out. That tiny difference is freezing the market, and the pain doesn't stop there. Insurance premiums, especially in states like Florida and California, are skyrocketing. In Florida, home insurance has doubled or even tripled for some families. For many buyers, it's not just the mortgage that kills the deal. It's the fact that insuring the house costs more than the property tax bill. Families walk away from contracts because they realize they simply cannot cover the monthly outflow. In July alone, more than 15% of signed home purchase contracts across the country were canceled before closing. That's the highest level in nearly a decade, and most of those cancellations came from buyers who discovered the real cost of ownership only after the deal was signed. So what are Americans doing? They're shifting where they live. The Sun Belt, once the hottest region in the country for migration and investment, is cooling down. Places like Phoenix, Tampa, and Austin are seeing inventory pile up, and price cuts become more common. Meanwhile, the so-called Rust Belt, cities like Milwaukee and Cleveland, are quietly turning into affordability havens. Redfin and Bankrate both rank them among the strongest markets in 2025. Buyers who cannot afford Dallas or Miami anymore are starting to look north and Midwest, and that trend could reshape the housing map of the United States in the years ahead. If you've seen any of our videos on the future of real estate, you know that home prices don't have to come crashing down for this crisis to ease. All it takes is for rates to fall just a little. But the problem isn't just with buyers. Sellers are stuck too. If you bought your home in 2020 with a 3 mortgage, why would you sell now and buy again at 6.5%? That lock-in effect is keeping supply low, which in turn keeps prices high, even while demand drops. And then there's the silent fourth factor: government and policy. The Federal Reserve is stuck between two forces: housing and technology. Massive investments in artificial intelligence and data centers are driving up the cost of capital, and the Fed worries about inflation. So even while the housing market struggles, interest rates are not falling fast enough. Policymakers are forced to balance the future of tech against the stability of housing, and so far, homebuyers are the ones losing. But wait, before you lose hope entirely, there's still time to make better decisions and profit from this crisis. And it all starts with understanding what's really happening behind the scenes. Number 1, rental demand is surging. As we mentioned earlier, millions of people are choosing to rent instead of buying. And that's boosting demand for rentals, leading to higher rents in some cases. However, this is also creating opportunities for savvy investors. Those who can snap up properties below market value and convert them into rentals can enjoy stable cash flow and long-term appreciation. Number 2, foreclosures are on the rise. As homeowners struggle to keep up with their mortgage payments, we're seeing more properties enter the foreclosure process. This can be a great opportunity for investors to find hidden gems at low prices. However, it's crucial to research local laws and regulations regarding foreclosures, as they vary from state to state. Number 3. Short sales are becoming more common. Similar to foreclosures, short sales happen when homeowners owe more on their mortgage than their house is worth. This often leads to a fire sale where the property is sold quickly for whatever the market will bear. Investors who are able to negotiate well and make quick decisions can score amazing deals this way. And number 4. Distressed properties are selling for a discount. When the housing market is uncertain, sellers who are facing financial hardship or other challenges may be willing to part ways with their homes for less than market value. By building relationships with local real estate agents, investors can get the inside scoop on these types of properties before they hit the open market. The key to profiting during this crisis is to think like an investor, not a homeowner. That means focusing on properties that generate positive cash flow, have long-term appreciation potential, and offer a good return on investment. It also means being patient, flexible, and persistent in your search. Don't settle for the first property you come across just because you think it's a good deal. Keep looking until you find the right fit for your investment goals. In addition, consider partnering with experienced investors or real estate professionals who know the ins and outs of the market. They can provide valuable insights, guidance, and support as you navigate the challenges of investing in a down market. Finally, remember that investing in real estate is a long-term game. Don't expect to get rich quick. Instead, focus on building a solid foundation, making smart investments, and weathering any short-term market fluctuations. With patience and discipline, you can position yourself to take advantage of the opportunities that arise in a changing market. Ultimately, the housing affordability crisis is a symptom of a larger issue, the widening gap between the rich and the poor. As housing costs continue to soar, more and more Americans are struggling to make ends meet. Many are forced to move to more rural areas where they can stretch their limited incomes further. Others are choosing to live with their parents or forego homeownership altogether. This trend is exacerbating the economic divide in the country and creating a sense of hopelessness for those who feel like they'll never be able to achieve the American dream. It's important to acknowledge these realities and work toward creating a more equitable society that ensures everyone has access to safe and affordable housing. Until then, the housing affordability crisis will continue to shape the lives of millions of Americans and have profound implications for the future of our country. One organization that's working to address this issue is Habitat for Humanity. They're a nonprofit that helps families build and renovate their homes through volunteer labor and donations. By partnering with low-income families, Habitat for Humanity enables them to secure affordable housing and break the cycle of poverty. Their mission is crucial in a time when homeownership is becoming increasingly unattainable for many people. As we wrap up today's video, let's remember that behind every statistic and news headline, there's a real human story. There are families who dream of owning a home, but face significant obstacles. By supporting organizations like Habitat for Humanity and advocating for policies that promote affordable housing, we can help create a better future for those who are struggling. In conclusion, the housing affordability crisis in 2025 is a complex issue driven by multiple factors. While it presents challenges for both buyers and sellers, it also creates opportunities for savvy investors. By staying informed, thinking like an investor, seeking expert guidance, and embracing patience and flexibility, you can position yourself to take advantage of the unique opportunities that arise in a changing market. Remember that investing in real estate is a long-term game that requires a strategic approach and a willingness to adapt. Stay focused on your investment goals, do your due diligence, and be prepared to seize opportunities when they come your way. With careful planning and execution, you can navigate the complexities of the current market and build a successful real estate portfolio. Thanks for watching. See you next time.